What's up, everybody? Welcome to the Friday weekly close live stream. What is up, Stone Pilot and Casey over there on TradingView? I do this every Friday every Friday except last Friday. I'm back from a little bit of vacation. Thanks for joining me once again. Discord, YouTube, and TradingView, my favorite, which I use for all of my charts. Good to see everybody here. And as always, if you have things to look at, like symbols or ideas, and we're going to talk about some ideas this week. I think there's a lot going on, a lot of unpleasantness going on in the world that may actually present some opportunity. We're going to talk about that as well as the topic for today, which is kind of a rehash of some old stuff I used to talk about years and years ago. And that was Bitcoin and how it related to inflation. And so that's, of course, why I've got Bitcoin going right here. So all the links down below if you want to follow on the social medias. But let's go ahead and get into it. This week, of course, we had CPI yesterday on Thursday. And that sort of was the impetus for me to start thinking about inflation. And I had some conversations with friends about, let's bring up the calendar to see it right here. So this week, CPI was expected to be lower. In other words, it was supposed to go from 3.7, which it was last month, to 3.6. Instead, it stayed at 3.7. That's the consumer price index. That is one of the metrics that the Fed uses to gauge inflation. Now, the thing that we got to remember about the CPI print and why I thought it was going to be incredibly, incredibly important was because of last year's October CPI print, and that is this spike. This spike right here on October the 13th, 2022, was basically where the market turned. In other words, the whole bear market of 2022 turned on a dime almost. Actually, it didn't turn on a dime. If we go up to the weekly and we look, it turned on the 50% retracement. All important, just about, depending on if you on SPY it's much clearer. The 50% retracement of the COVID low up to the all-time high, that was last year's October CPI print. And of course, we had this one this year, and I was really genuinely expecting it to be more of a impactful event than it was. Instead, it really didn't change what was going on this week. Basically, the stock market has already turned on its 50% retracement from the March low. The March low, when banks were going to fail, hit that level on SPY, let's call it 420, giggity, and ES, same thing. And so everything's sort of following 50% retracements very, very well. And that also goes in Bitcoin. Now, Bitcoin all year long has, from the FTX low, been holding the 50% all the way to the March banks are going to fail. And then, of course, it had another 50% when it went from March up until April, boom. And then that has been the support that has so far held at about 25,000 over the last few months. And guess what? This little run up that we had right here, this little breath of hopium, well, it was also a key 50% level, 28,279. Let's call it 28,400. That was the resistance that Bitcoin hit over the last few weeks. And now, where does it sit? It sits holding a little minor 50%. So 50%, 50%, 50%. Such a powerful level. Such a powerful level. Now, let me go and again, if you guys have any questions, if you have anything to look at as we go through it, I try to keep up with chat as much as I can. We will definitely get to those. Put them in the chat. All right. Thoughts on DXY? Yeah, let's talk about DXY. I think that dollar, again, the 50% level for the DXY, the dollar index, was 102. I've got this marked off right here, this trade as it were. Let me put this up on the weekly. That's a little bit better to see it. And so essentially, I've been looking for the dollar to hold that 102 all the way back from January this year. It kind of bounced around it, but I think now that what we're looking at it coming up to is probably, well, we need to update that to here. Looks like it hit the 50% of the leg down from the high in September 2022 down to the low of July. And that 107.17, it hit it pretty good right there, didn't it? And so it needs to conquer that level. But overall, dollar strong, at least against every other currency. Every time I talk about that, oh, what was that? Let me see. Where was that? Let me look up this chart. Did I post it in here about on Discord? The U.S. dollar being used for foreign currency transactions charts. Jen, can you look that up for me? If I did, may have posted over on the other Discord. But really, what the DXY is showing is the euro dollar, and of course, it's going to be inverted. So if we do USD EUR, we're going to see about what we would see on the DXY, because that's going to be making up most of the dollar index. And so whenever I talk about how the dollar is getting strong to my crypto bro friends, they always give a caveat, well, relative to other currencies. But let me get into that. Let me jump into this conversation that I wanted to have. And this is it's a little bit of a pat on the back for me, but I'm not too proud of it because it's not like it really helped many people. So what am I talking about? So back in April of 2021, or excuse me, May of 2021, I started really challenging this narrative in Bitcoin, that Bitcoin was a hedge against inflation. So if you'll recall, let's go back to May of 2021. This was where we had that first major dip in the Bitcoin bull run. It looked something like this. But since January of 2021, to justify this big rise in price of Bitcoin, I started hearing on social media this call that Bitcoin was the hedge against inflation, because the Fed was printing money like it was going out of style to get us out of the COVID recession. And Bitcoin had a fixed supply. And when people would say this, they would feel really good saying it. They would feel really good saying, oh, Bitcoin's fixed supply, it's deflationary. It's like everyone became a Nobel Prize winning economist because they read a couple of social media posts and they thought everything made sense. But I was challenging that notion at the time because it was so late into the bull cycle. One of the things that I thought was, if we're going to have inflation, if they're going to raise interest rates, which they will to curb inflation, we didn't know about it in 2021, the banks are going to do very well. And in this video that I made challenging that narrative, I talked about Wells Fargo. And what's interesting is, if you go back and look from May of 2021, or let's go back, if we either take it from January of 2021, let's do both. From January of 2021 or May, when I made that video, the different points that Bitcoin are, so from May, about the same, to May to here, yeah, about the same. So basically, Bitcoin from May or January, take your pick, of 2021, an investment in Bitcoin trying to beat inflation is down 22%. Now, how's the dollar changed in that much time? Let's see if I can look up a buying power of the dollar since 2021. So apparently the purchasing power of the dollar has declined about 7.4%, which makes sense if inflation is, as the CPI suggests, about 3% year over year. You think after about 2 years, it would be somewhere more than 6%, basically. So, in other words, Bitcoin did not beat inflation since that meme came into being. Now, granted, Bitcoin was obviously higher at different points, Even in the last couple of weeks or a couple of months, it was down 8.3%. But my whole reason for making a big deal about this is to challenge these stupid investment memes that get circulating on social media. A lot of Bitcoin maxis think that they're going to meme themselves into fabulous wealth if they just get other people to buy Bitcoin and believe in this narrative that Bitcoin is the solution to inflation. It makes so much sense because Bitcoin has a fixed supply and the US dollar doesn't. But there's one major, major thing that is going on with Bitcoin that is always going to go on with it, and that is the miners. The miners that produce the Bitcoin, even though they're going to be producing less and less as time goes along, they still have to pay their workers. They still have to mainly pay electricity cost. And this week, some information came out. One of China, Bitcoin is banned in China, but they can still make ASICs, which are is it asynchronous specialized integrated circuits, application specific integrated circuits. These are chips that do one thing only, and they mine Bitcoin. And Bitmain is a company that has been producing these for many years. They're the top producer of these types of chips. Well, they're facing some challenges, not paying their workers, not doing some rebates they've offered to some long-term buyers. In other words, people aren't buying more Bitcoin mining equipment. And that's because the miners are probably having a hard time staying in business. I think there's another thing I saw this week. This is a mining company in Austin, which is using, I believe, some cheap energy to try to get some kind of an edge. But they are, Yuga Labs, Ledger, and Chainalysis laid off portions of their workforce. It's an NFT startup. Let's see, where's the one about? Yeah. So the mining industry, which is what's driving probably a lot of the selling pressure. I say probably because why else would Bitcoin be going down if it is fixed supply, right? Well, people aren't buying it YOLO style like they were. That's one main reason. But I think it's going to get even more difficult as the halvening happens. If the price of Bitcoin does not go up to account for the decrease in supply being produced in the Bitcoin reward halving cycle, then it's going to be very, very hard for these Bitcoin miners to stay in business. They're going to have to sell more of the Bitcoin into the market to pay their costs, and that's going to drive the price down even further. So a lot of people have been, talking these last few weeks and months about, you need to buy now before the halvening goes up. Well, just because it's happened in the past doesn't mean it's going to happen in the future. Bitcoin has existed. It was molded by a 0% interest rate environment, cheap money that made its way into the price of Bitcoin. And that doesn't exist anymore. Pretty soon, Michael Saylor is going to run out of borrowed money to spend on Bitcoin. And so I challenged that narrative to people years ago. And, well, if we go and look at Wells Fargo, which was the company that I was looking at the time, either from January of 2021, when that meme first started getting started, the memes started getting started. Yeah, exactly. It was in January 21. This is when everyone was supposed to buy Bitcoin because of inflation. Versus May, when I made that video. May 24th, about right there. Right. So remember, Bitcoin is down about 22%. Wells Fargo from that point, May of 2021, is down 10%. So still not a win. But from January, when everyone was focused on getting into Bitcoin for a hedge against inflation rather than banks, Wells Fargo is actually up 35%, whereas Bitcoin is down 22%. Now, of course, people will say, oh, this is apples and oranges. But look, let's take a step back. Let's just pretend or just assume that this whole economic experience, this is the U.S. economy, is not going to fail. I know that's hard for people to rationalize if they're in this doomer mindset. But we need to be thinking about investment opportunities, where to put capital that's going to give us the best return on investment. That's what I want to try to help people to find. That's why I do these, live streams. That's what I'm always looking for. And so in that discussion I had with my Bitcoin Maxi friends this week, I don't think they're going to listen to me because, man, they've got so much ego and their entire financial future in some cases tied up in Bitcoin that they're not going to listen. But I really think the opportunity right now, and of course I'm going to talk about it, is in defense stocks. I don't like to talk about politics, especially, high charged emotional politics, unless it has something to do with markets. And I think that this does. I think that in a different way than the Ukraine conflict, because in the Ukraine conflict, the United States and European interests were basically dumping their old munitions on Ukraine to fight Russia. So nothing really new was being produced because I don't think they trusted Ukraine to have new weaponry. It was mostly just old weaponry, old stockpiles. Because I think there was some statistic I read that the United States is one sign of weakness that we can't produce enough shells. I think that Germany in World War I was able to produce more shells than we can today, or something like that. But in the case of Israel, with the amount of money that the United States government is committed to spend, there's no price tag that's going to be put on what Israel is going to buy from our top-end weapons manufacturers. And this is, I do believe that recent events are going to spur a buying spree in that case, and not just Israel. I mean, other countries too that are concerned about this tension in the world. I mean, we got two separate hot theaters of war going on right now, and so one of the things I said to sort of be tongue in cheek is sell Bitcoin, buy defense stocks. I know they're two separate things, but if we're really considering where's our money going to give us the best value, I told my friend, make a calendar event. A year from now, let's do a comparison, just like I did the bank stocks versus Bitcoin 2 years ago. A year from now, let's see what actually outperforms, Bitcoin or defense stocks. And so that's going to be my segue to look at opportunity this week. And I was going through all the major defense sectors. We talked about this before with Lockheed Martin. And by the way, let me stop here before I start rambling. If you guys have questions or if you have symbols or ideas to look at, if you want to tell me that I'm wrong, put it in the chat. And by the way, links are below. I do this on Discord, YouTube, and TradingView every week. All right, let me catch up with chat before I start talking about this kind of stuff, though. Let's see here. Can we look at IBKR? Sure, Trash Can. Interactive brokers. Interactive brokers have been around for a very, very long time. They have sort of been the flag, I don't know what you call it, flagship, but kind of like the standard for people that want to program their own sort of algos, their own trading systems. The reason I haven't used interactive brokers is because I have a little small programming brain, and I just gravitated towards TradingView, where I could use their scripting platform a lot easier to do my alerts. But I know a lot of people that use interactive brokers to basically automate their signals and or their trading. And so interactive brokers, to see them doing well makes a lot of sense for me, because I think they have very good product as far as that goes. As far as an investment, it's going up. I don't see it's making higher highs, higher lows. I would say if I was in this, I would hold it. I am not. I don't really see a good pullback. They had a really good pullback, it looks like, from their COVID low. Well, it would have gone up to here. It's there roughly, but yeah, it keeps on pushing higher. It's bullish. I don't see a buying opportunity there, but it's definitely a hold. If you read those kind of those things that analysts put out, this is buy, sell, hold. This would be a hold. I like interactive brokers. I just don't use them. but I know a lot of people that do for their trading businesses. Thank you, Raul. I appreciate the vote of confidence there. All right. BTC is not a Ponzi scheme. Do a quick search for me, Jen, for US dollar as percentage of global transactions. See if you can find that. See if you can find that. So Bitcoin, we need a different word in crypto for, it's not a Ponzi, okay? A Ponzi scheme involves getting a bunch of investors to buy in, and then you're paying out to those early investors while you're getting new investors in. I would say it's more of a pyramid in that, you need cash inflows more than cash outflows to keep that price up. And that's what, late into the day, fortunately, I didn't buy into the DeFi Web3 craze there at the end of the crypto bull cycle. I was following it. I had a whole list there that I created back when people were really wanting me to follow this stuff for them. Like Solana, Tezos. Oh man, this is gonna be gross to look through some of these. Cardano, ugh. Ethereum Classic, Litecoin, Ripple, AMP. Oh man. Basically, cryptocurrency needed a 0% interest rate environment and hype. Otherwise, you just end up with charts like this. Sorry, Jen. Sand, Mana. Who would have thought in 2021 that a chart would look like this? It's because I've seen it before. It looks like all the penny stocks, basically. I mean, price has psychological patterns. That's why I chart them. That's why I study them. That's why I try to teach them. And this is these are all examples of valley of risk. I mean, once price fails to hold a key support level, I've had people come into my chat on these live streams week after week, like, what do you think about this crypto? And I know that they're in it. I know they've been holding it for 2 years now. They want me to tell them, oh, well, it'll be okay. No, unfortunately not. It's definitely not going to be okay. Not unless we go back to 0% interest rates. But I need to go back through and look at some of the old. What's an old cryptocurrency? We're talking like 2013, 14 era. What's an old coin? Anybody remember one? These are all relative. I mean, Shiba Inu. No, not Shiba was new, but Doge is one that came about in that era of creating altcoins. Yeah, this is not even as old as Shiba or Doge was. But basically, without cash to come into these, without just the emotion of sick gains, eCash. No, not that old. Not that old. XMR. Well, XMR is a little bit different. We can talk about XMR. I definitely love XMR. But yeah, let's get into that. Well, no, we're on crypto. We'll talk about defense stocks here in a second. But let's see. Trading. There we go. So I've of course been watching XMR because I do believe that Monero has a use case, that of privacy. And so the price of Monero has remained pretty stable going all the way back for the last 2 years. And the better comparison is to look at XMR versus Bitcoin. And I think one of the things that I found really interesting throughout 2022, when Bitcoin was going down, Monero was actually maintaining its value. So in the darkest of crypto winter times, before Bitcoin started to find a floor and actually come up, Monero was actually doing better, outperforming Bitcoin. That's because it still has uses. People still use it on the internet to buy and sell shady goods. Doge was satire, but yeah, people still made some money. I had a friend that owned some Doge and refused to sell because his son had bought it, and unfortunately, his son was young, died I think when he was 13. But he refused to sell it as sort of like sentimentality. I wanted to do like an interview with him back at the time because I think he had something to the tune of maybe about almost maybe $5 million in Doge, but he didn't sell it actually. But he didn't want to talk about it publicly, but for obvious reasons. To my knowledge, he still has it. But maybe cryptocurrency will find a use case. Maybe it will. But for right now, people are still trying to hold on to that dream, hold on to those memes. We're going to see what happens. These ETFs are going to get approved, but the problem with that is a lot of people think that these ETFs are going to pump the price of Bitcoin because people will have access to be able to buy these ETFs in their retirement accounts. But you still have to have people want to buy it. And there's no better advertisement for an instrument than a rising price. And the converse of that is the reverse of that is if price is going down, people are not particularly interested in buying it. Trust me, I know. I've been doing this for a long time. When I try to tell people to buy something at a low, they don't listen. All right. What about Robux? Thank you for the defense. We're going to look at that in a second. Let me see if I can find that that chart I was looking for. Let's see, U.S. dollar as percent of foreign transactions. Fix my spelling, Google. There was a chart. It basically showed recently where can you scroll up on Amateurs Discord and see if you can find it? It's a chart, and basically it shows U.S. dollar versus euro versus yen, and really what's happened in just the last several months is the U.S. dollar has started taking over from Europe. I know it's 88%, but there's a chart that really shows where it really starts to diverge. It would have been maybe about a week ago, or this week. All right. To chat, let's see. Any thoughts on MakerDAO? Jacobs, what's the symbol for that? I don't know what it is just based on that. Your mate who kept the Dogecoin is okay. Musk, yeah. Yeah, well, okay, so that was the thing about JP Morgan Chase. It's they're just not letting people use their bank account for transactions in cryptocurrency because it's rife with fraud, which it makes sense they're trying to protect their customers. But then again, it is part of a larger problem of perception with cryptocurrency. Am I fundamentally bullish or bearish about Bitcoin 10x trading? I am fundamentally bearish. And I'll reiterate what I was talking to, maybe if you joined a little bit late. I think that the miners are facing a lot of hard times. Earlier, we talked about layoffs that the mining companies are doing, also the people that produce the mining hardware, the ASICs. So that industry is definitely having some major headways, and they need to keep selling Bitcoin, so keep the selling pressure up in order to stay operating. There's a lot of talk about the halvening, which historically has created rises in price in Bitcoin. But when you talk about something historically, we're talking about something that's happened really 2 or 3 times. That's not statistically significant. It's like, you talk about, it's like a rising tide lifts the waves higher. Well, we've had a 0% interest rate environment throughout Bitcoin's history. And so Bitcoin was bullish with money flowing into it this whole time. So that it rose prior to the halving is probably not as significant as the fact that Bitcoin has gone up so much in the last few years. You know, when people show me charts about the halving cycle, they think that they see a pattern there, but I think they just want to see a pattern there. It just has been going up. It's like correlation versus causation. I don't think it's causal. Then you have the ETFs that are coming out that people think are going to give Bitcoin a lot of, you know, lift because more people can buy it. I think that once these ETFs are launched, Bitcoin is actually going to drop. And two reasons for that. One, because everyone's expecting it, and so there's really not going to be anything new, any new bullish information that's going to come out to pump Bitcoin's price after the ETFs are launched. And the last time that there was a major Bitcoin tie to TradFi, traditional finance, was on Sunday, December 17th, 2017. The top of that bull cycle was when the Chicago Board of Exchange, the CBOE, launched Bitcoin futures. Everyone was expecting that to be a big bullish event. And just once that news actually came out, it's basically a buy the rumor, sell the news. Once that came out, that was actually the top of Bitcoin then. So that Bitcoin would get integrated with traditional finance, to me, historically, is actually bearish. Because once it happens, there's nothing else for people to really be excited about and buy it based on it. And I know why more people don't see it that way. It's because they really, really want to get really, really rich off Bitcoin. And that's why I have, you know, maybe 200 people that listen to what I say, and people on Twitter have hundreds of thousands, because people on Twitter are saying what they want to hear, which is funny, dank memes about, you know, oh, Bitcoin is the solution. Bitcoin is hope. You know, just hold your Bitcoin. We'll all make it, man. I just don't see that as being particularly efficable. And furthermore, from a technical perspective, and this is the reason I've been short for many, many weeks, talking about it every week, is because from the March 22 high, swing high in March of 2022, down to the low in November of 2022, Bitcoin hit a resistance at 31,839, which is a 50% retracement, and that has been the resistance that it has held. Furthermore, now it has come down to hold a 50% of this leg down just last couple weeks. So once again, we're going to have to come to this support. Oh. So from a technical standpoint, we could break down and come back and retest probably about 25K and see what happens there. But I wish I could tell people what they want to hear. But I tried to tell people to get out of Bitcoin in October and November of 2021. Where are those? Let me go find that real quick. Jen, did you find that for me? Yeah, so October. Yep, here it is. So this was a video that I made in October 27th. And basically what I was saying was that Bitcoin was failing to close higher than the previous high. Now, November came up to break above it again and then close back below that high. But the premise was basically the same. If something was going to continue going up, it should have had people buying, creating a big green closing bar above that past high, like it has done in every other bull run, whether it's Bitcoin or any other coin or a penny stock or the U.S. stock market. And that was the problem in October and November of 2021, was the false breakout I was doing. But no one wanted to listen because everyone had laser eyes. for 100,000. Kind of like everyone looked for Dogecoin to be $1 when Elon Musk went on SNL. Again, you got to think. You got to think outside the box of these memes that go around social media. And yeah, I mean, 148 people, probably, three-quarters of those were bots that actually listened to what I had to say about this because I wasn't saying what people wanted to hear at the time. But it's truth. It's price action. It's just price action. And that's what I try to say here. And so, look, I could be wrong. I am humble enough to admit that. Something could happen and pump Bitcoin up, 10 or 20%, and then I got to reevaluate things. But I don't really think it's going to. I think that we're going to be through this Bitcoin crypto winter is going to last through 2025. And then we might see some kind of resurgence. We'll reevaluate then. But it's going to go on longer than people think it will. A lot of people this year in 2023, when we have this leg up right here, 100%, increase in Bitcoin. A lot of people thought, okay, all right, we had a little down move here, but things are going to be fine. But a lot of that sentiment is starting to kind of fall off now. We'll see what happens as we go into the rest of the year. But I think that there are better things to be putting your savings into now than Bitcoin. I know that's heresy to the Bitcoin maxis, but that's just what I believe. Hashtag this is not financial advice. But do what you think is comfortable. All right. You went all out on crypto November the 15th, 2021, because price action showed me to do so. Oh, no. Wait, what price action showed you to do so on November 15th? I'm sorry, dude. I hate to say that. So here's what happened on the weekly chart. And we got to talk about this now for your sake. We'll talk about defense stocks here in a bit. So let's go back further. Let's go back to, all right. All out, you sold everything. I'm sorry, dude. Who were you following back then? Were you following people on social media? Oh, you went all out. Oh, you got out. Okay, okay, I misunderstood you. You went, well, good, congratulations. Like when you say I went all out, it means I went all in. Okay, so you went all out. Good. Yeah, okay. So, but since I'm talking about it, let's talk about the price action there. Because yes, you read price action correctly. All right, it's taking too long. Come on. So, what you want to see when something is breaking highs is you want to see this. Do you see this big green bar, folks? Here's the past high from June of 2019. And then here is where it broke it in November of 2020. Big old bull candle. No room for questioning that thing broke the high. And as things went along, you had big green bars. Even this little dip right here. The next green bar, solid close above it. And then we get into this first major, oh no, kind of dip. Well, let's mark that off. What really got me worried was this October price action right here. This bar right here, October the 18th, which is why I made that first video. And then November, you had the same thing happen. Close up above, or excuse me, this bar pierced the past high and then closed back inside it. And then you had this. Then finally you had in this month right here, December jobs report. Why would the U.S. jobs report cause Bitcoin to go down? Well, that's because Bitcoin was interest rate sensitive and it was looking at what the Fed might do. No one wanted to listen to that either, but I told people then, if it breaks this December spike low, this liquidation spike, get out. No one wanted to listen. And yeah, it danced around it for a while, but if you had gotten out around 40,000, you'd be a lot better off than you would be today or throughout that whole thing go down. So good for you for getting down on that. All right. We'll look at your things, Casey, here in a minute. Clactonian, LNG, are you talking about light natural gas? Actually, I was going to look at natural gas. I actually have that on my. Let me bring up my notes for this live stream. We did talk about XMR. Yeah, I have natural gas up there. All right. Well, let's segue out of crypto and let's start talking about world events. Now, I saw this video of the Emir of Qatar talking about wanting to turn off natural gas production as a result of the bombings in Gaza. That was fake news. Totally fake news. Someone added that completely wrong translation to it. Probably to try to get some kind of a bump in the price of natural gas. What I will say about natural gas, though, is is nothing different than what I've been saying for the last couple of weeks. Because I think it's been a while since I looked at it, but natural gas, if we look at it from an Ichimoku breakout perspective, it is trending slowly, but trending bullish above the cloud. So I would really like to see this breakout of this consolidation right here and then go up. And there's a lot of room for it to go up. But so far, those reports of, there are going to be natural gas embargoes turn out to be fake today. I don't know if that's what you saw too, but I did a little bit of investigation on it because the first thing when I saw that news report was I went and looked at the chart and I didn't see any major bump ups. I was like, that's odd. Turns out, like I said, it was fake. So one more question regarding Bitcoin. How do you interpret that Bitcoin went up big in March during the banking crisis? How do I interpret that? Well, I think it's more important to think in terms of Bitcoin going down because of the banking crisis. I think rather than, what I think a lot of people want people to infer from Bitcoin going up during the banking crisis. A lot of the Bitcoin maxis have this mindset like, oh, well, banks failed, so people bought Bitcoin. No. So the low here for Bitcoin was March the 10th. Okay. Let's look at my favorite bank stock, Truist. Think about March the 10th, March the 10th, March the 10th. March 10th is here. So Friday, March the 10th was here. The banking stocks, the banking FUD, the banking contagion, the fear, uncertainty of doubt was going on in that first week and a half of March. Bitcoin went down as a result of economic uncertainty. That is the takeaway. And this is backed up by what it did during COVID. During COVID, when everyone was so worried about what was going to happen in the world, Bitcoin dropped from its high in February down to a low. Bitcoin dropped 61% on COVID fears. And then for banking, during the banking FUD, it dropped from its high 22% over the course of just a few weeks. And then let's just look at the S&P 500 during that time period too. So March the 10th is here. So again, it's very correlated from here to here, March the 10th. The S&P 500 was down 7%. And then basically the S&P 500 turned up. The last low day was March the 13th. And Bitcoin turned up basically a little bit earlier, a few days earlier than that. But essentially, the rise in Bitcoin was not due to people buying it because the banks were losing faith in the banks. The people were buying Bitcoin because the pressure of negativity, the pressure of the FUD was being lifted once people were able to analyze, okay, this banking thing is not too bad. But the key thing that you need to take away is not that people bought Bitcoin because they thought it was better, but that Bitcoin was a risk asset and it was correlated to negative thoughts in the economy. And that's what I keep telling people about Bitcoin and when to buy it. You really want to wait until we actually hit a recession. You do. Not before. Definitely not before. Because Bitcoin is going to go down when the stock market is going down, when asset prices are going down. Bitcoin's going to drop, and it's going to drop more. The stock market on COVID dropped about 30 something percent. Bitcoin on COVID dropped 60%. The stock market on the banking FUD dropped, as we saw, 7%. Bitcoin dropped 22%. And so if you want a buying opportunity in Bitcoin, you wait until there is some sort of recession or fear or something on the horizon. That's when you buy Bitcoin. It's not what that's not what people in social media want you to say or hear. But historically, that's the most true thing out there. It's seen it every time. Well, all the times we've actually had recessions since Bitcoin was born after 2008. Who knows if we had some kind of a 2008 wide actual big recession that lasts a few years? I think that would be pretty bad for Bitcoin, actually. Really bad, actually. Because people are going to need to sell that little bit of Bitcoin they have on their Coinbase accounts to pay for groceries, pay rent. That would be bad. They're not going to hold on to this asset that may or may not be worth a lot when they need to actually pay their bills. So a really bad recession, it would be very bad for Bitcoin. I know that's not common wisdom on social media, but it makes the most logical sense to me from basically what I've seen in the last decade or so trading Bitcoin. All right. So let me finish that segue I was going to make. Defense stocks. We need to look at defense stocks for opportunities. So let's look at Lockheed Martin first. Now, Lockheed Martin is an interesting case I want to look at first because it was another example of a false breakout. I've already got it marked up here. But Lockheed Martin did a false breakout from the November 2022 high, and then in April of this year, on the weekly, it pierced up above it. Was that on earnings? Yes, it looks like it was on earnings, came up above it, and then closed below it. This was a very good short on Lockheed Martin. Hey, look at that. If you missed that, it would have come down, and you could have got it on the next earnings cycle right there in July. Now, where does this sit? The chart is kind of messy. It has a spike. In other words, it came down, broke these lows, closed back above. Big jump this week in Lockheed Martin that I think you have to pay attention to because of the world events. Basically, it closed here, and it closed the week almost 10% higher. So Lockheed Martin up 10% on all this stuff going on in the world right now. I think we need to be looking for a pullback. You're welcome, 10X Trading. I want to be looking for possibly a pullback on the daily to 418, 418, 420, if you will. And so that would be what I'd like to see, a pullback. And we may not get it, but I think we need to be looking at defense stocks because, like I said, in a way that's different from Ukraine. Ukraine, the United States and Europe were basically dumping all these old munitions from the Cold War into Ukraine for them to fire. I don't think they're going to put a price tag on Israel. There's no. It's going to be the latest, greatest. The Iron Dome is a feat of modern military engineering, and they use that to great effect to protect them from rockets, smart bombs, drones. Man, if I will talk about politics for right now. So what I think is going to happen, or what I think it did happen, is I think that the people in Gaza went out and poked the bear, and they wouldn't have done it if they didn't know exactly what was going to happen. And how do you defeat a larger adversary? You tease them, you taunt them onto your home turf, and then you pop out of your holes and engage them that way. And Biden this week told, I think, Congress, or he said something to the effect of that we should be prepared for a long conflict. We sent an aircraft carrier battle group over there. We're probably going to be flying missions in air support of Israel. And Israel is going to be spending a lot of money to try to root out everybody in this little area. But, you know, guerrilla wars, they're nasty affairs, and they go on a lot longer than people think. And so I think that a lot of money is going to be spent on defense spending. These companies that make rockets and bombs and all the stuff that goes boom. And I think that's why you see this 10% jump in Lockheed Martin this week. I don't really see an opportunity in Lockheed Martin yet, but I do in Raytheon. Raytheon just happens to have had not such a good year coming from April, but it has come down to a 50% level. And it actually popped itself up to this level 73.36 right about this week. This is the opportunity I believe we need to be looking at. So just like anything else, I think Coca-Cola also this week brought itself down to kiss a 50% level at 51.64. Basically, that this was from news last week we missed because I was away. Apparently, there's a weight loss drug, Ozempic or something like that, and that's making Walmart recognize that people are buying less junk food. But anyway, 50%. You know, to keep track with some of our other 50% levels, MetLife was one from earlier. Boom, an excellent 50% example, 50 at 50. So I think that Raytheon is going to be the choice for the immediate future. Once we can maybe get a close back above that 50%, close next week probably, 73.36. Be looking for opportunity in Raytheon. Raytheon for sure. Let's see, what else? Knock, Northrop Grumman. Northrop Grumman, again, big old green bar this week. Big old green bar. And that comes after, yep, look at that. Right off that 420 level. Should have been, I didn't, but should have been buying this thing before this war popped off. Wow. That is such a, oof. Wow. 16% in a single week off of that 50%. That's why I trust 50% levels, guys. That's why I use that for, you don't see a bunch of moving averages. You don't see a bunch of, MACDs. You don't see a bunch of stochastics. 50% retracement levels. Wow. To miss something like this hurts. But again, we didn't know this was going to happen. We didn't know it was going to be this much. But there were several weeks there where I should have just been looking at this. Oh, well. Man, that's a big bump. That's a big jump off of that. BA, Boeing. Yep, that's next on the list. So, all right, we might have a 50% off this little trend right here. I think we do. Just about. Set an alert on 182. Not quite as clean as Raytheon and Northrop Grumman. Palantir, which is it's a defense stock, I have been told. It is an AI defense stock, but I really think that it is kind of hitting up against the resistance right now. I'm not quite as excited about that. And what's KTOS? KTOS. That's new to me. Kratos Defense and Security Solutions. Okay. I would say that if you were going to build a portfolio to express defense stocks, I think that your big players would be your blue chips, like Lockheed Martin. Let's just list these out. So what would I do? Let's do Raytheon here. If I was going to do a portfolio of defense stocks, to keep it simple, I'm not going to look up at volatility and that sort of stuff, but we need to do Lockheed Martin, RTX, NOC, BA. I'm going to trust my friends for telling me to get KTOS and Palantir. But I would say that of these, let's give about maybe a 20% weighting for each of these. And then because I am less confident about this, we give 10% to these, or 5%, something to that effect. I would probably actually want to have maybe 5% allocations in these, and then kind of spread out the rest through there. Probably put more into RTX and what was the other one coming off of it? Boeing, I think so. Yeah, Northrop Grumman's just already gone up so much. So this would be more what I would do, honestly. Is that, let's see, that's 50? Yeah, that's 50%. That's 100%. So I think that over the next year, based upon this conflict, this would probably give you a higher beta than the stock market itself. I still think the stock market is bullish, by the way. Much to everyone's, disagreement that the world's going to end, the stock market's going to crash. I think every year you pretty much need to assume the stock market is going to go up. You just need to start from that assumption. So, all right. We're going to start wrapping up here. So if you got any symbols to look at, put them in the chat. Compare NOC to LMT. That's good to snag some Coca-Cola, yeah. I mean, I love my fake sugar water. I don't think that the reason that Coca-Cola went down a bunch, but it really just came down to that 50% level right there. And it's actually, I was hoping they would do some kind of a better, Tinkinson pullback, TS pullback, but it looks like it just held right there. As long as it holds that, I think this is a good little retirement portfolio thing. And by the way, at this price right here, it's a little over a 3% dividend yield. So it basically, all else being equal, the share price, if it did nothing, it would keep pace with inflation by its current metrics, basically. All right. Compare NOC to, dividend rate 3.4%. Compare NOC to LMT. What do you mean compare it? That's old. Oh, okay. Okay. All right. Let's see. Let's go through Casey's. Casey's breakouts. BIP, Brookfield Infrastructure Partners. Looks like it's going to be a bearish breakout. It's above 20, so I'm cool with it. Let's see. Do we have some past price action? We got the COVID low. Where can I find you a support level? That's probably not going to be valid, but yeah, this thing is in the valley of risk. You don't really have a support here. There's really nothing for it to go down. So you're saying BIP with a target of 2170. Yeah. Actually, I like that because that is the Tinkinson turn right here. Basically the 9 period median goes flat for the turn. That is if I'm trying to play something for a higher low, I'll typically go to that instead of the low. And so that's at 2006. And so your target of 21. Okay. I like it. All right. Next up, TSN. That's Tyson, right? Tyson Foods. I may not like this one because you're coming up on a bunch of lows right here. This is going to be a major inflection point. Yeah, like this high, which turned out to, and you can see here where you have the high, it holds it, breaks above it, comes back, finds support, launches off of it, and then you have the COVID low that came down and broke it there. Let's see, your short entry is at 45. Yeah, watch out, man. You're right near a support here. That's a little bit more dangerous. I don't like that quite as much. All right, and then MTCH Match Group. Oh man, don't they own all the dating apps? I think people have just given up on dating. Yeah, man, I'm so glad that I met my girlfriend on a dating app, and I'm done. I'm happy. I don't need to keep looking. And I didn't have to pay anything for dating apps either. I was pretty lucky. It helps to be 6'3". Let's see. You got the low here at 31. Target of 3102. Okay, so you're just taking a little short thing to the bottom. Okay, that might work. All right, Monster. Okay, let's take a look at Monster. Monster is a great example of why sugar water has been a good investment over the past couple of years. Okay, all right, Monster. I think we've been talking about this over the last couple of weeks. So I have these two levels already marked off, 49.95, which it did not hold. I would say that probably this is in correlation with Coca-Cola because I think actually Coca-Cola owns a lot of Monster. I gotta say this is probably a buying opportunity. You want to have a stop like you would anything else, but I would actually say, I would say that now or come Monday, that you would probably want to look at this being a bullish opportunity on Monster. Is pulling back, not breaking the Ichimoku cloud. A little kind of a nuance there. It's a rising cloud, so you can assume bullish. I like it. It's at a 50% level, that 48.18. Closed a little bit below it, but I would say this is on a weekly, so go down the daily and try to find yourself maybe a little bit of a recapture of that level, pull back to it, and then a potential long trade there. I'm actually going to make a note of that. Thank you for bringing that up to me. That's why I do this, guys, because I can't look at everything or remember everything. And so I'm glad to have people come in and share their trades and share their ideas. So Celsius, CELH. And if you got anything else, pop it in the chat. Celsius, did it drop on the news? Man, Celsius is just, I don't know what's going on with that. I tried Celsius and it didn't really, I didn't really like it actually. But I guess it doesn't cost much money to make these things. I don't really see a bullish opportunity. I think Monsters is a lot better based on what it is. Yeah, the taste isn't really that great. You bought the top and what? Monster and Celsius? Bro. Why don't you just run everything you're going to buy through me first? Hashtag I don't do financial advice. All right. Thanks, guys. As I said, I do this every week. We'll be back next week, 4 p.m. That's UTC -4 Eastern Time on Discord, link below, TradingView, and YouTube. As always, trade wisely, and we'll see you in the next one. Bye-bye.